Hi there, and welcome to the first Abu Dhabi Bank Global Investment Outlook. This is the quarterly update, and I'm thrilled to be joined by Glenn Wepener, who's the Chief Strategist at First Abu Dhabi Bank, and we're getting his thoughts within the oil market. Glenn, thank you so much for joining us. It's good to see you.
Thanks, James. Always good to chat with you.
Let's get stuck in. So oil prices, the market's been quite volatile since the last time that we shot our oil review video.
Yep.
What's your thoughts on prices for the rest of this year?
Yeah, look, I mean, you're right. The market has been relatively choppy over the past few weeks, buffeted by both headwinds and tailwinds, of course. But in general, my outlook hasn't really changed all that much. We still have the primary drivers there, so on both sides of the equation. So, you know, ongoing supply concerns, the worries about the small amount of spare production capacity that's available, the low level of inventories, particularly when it comes to fuel products. And then, of course, the ongoing geopolitical issues, right? So whether we're talking about the conflict in Ukraine and the consequent tightening of sanctions on Russia by the West. We also have fresh disruptions in countries like Libya. You would have seen last week the protests across the country there over the rise in the cost of living, which led, of course, to the storming of the parliament buildings in Tobruk last Friday. We've also seen similar sort of protests in some of the other smaller producers like Ecuador. And then on the other side of the coin, of course, we have growing worries about a potential global economic recession. We still have sluggish growth happening in China, partly due, of course, to their zero COVID policy, which looks like they'll continue to pursue at least for the time being. And then perhaps for a lesser degree, you know, slow but rising US oil production, and the fact, to be honest, that Russia still seems able to sell a fair amount of its crude at this point in time. So basically, yeah, so as I say, my outlook hasn't changed all that much. I have adjusted my forecast for Brent slightly, and I look for Brent to average $108 a barrel this year. Okay. And just to put that into context, the current rough year-to-date average for Brent is around $105 a barrel.
Right, so, okay. The last time that we spoke about Iran, deal or no deal. It looked like things were not being so fruitful. It wasn't going to go ahead, but now it looks like talks are back on the table. So I'm curious to know your thoughts.
Yeah, so yeah, the talks had been suspended since March, and no progress had been made. As you say, last week those talks resumed in Doha. From the reports that we saw, no major breakthrough was made at these latest negotiations, but there was a lot of chatter afterwards on the weekend, this past weekend, that these talks could resume again soon, and that a partial agreement may still be possible. Now, I think that if they resume, they'll probably occur after Biden's visit to the region. As you know, he's coming here mid-July. He'll be in Israel, he'll be in the West Bank, and he'll be in Saudi Arabia. So I think overall the chances of a deal remain still quite low, but obviously given the current events, it's not completely dead in the water yet.
So you mentioned Joe Biden, so let's touch base on that a little bit more, because when he does visit the GCC region in July, I'm curious, what impact is that going to have on oil prices?
You know, there was a lot of initial media speculation that one of the primary topics during Biden's visit is going to be for him to try and get the Saudis to raise their crude oil production. Look, on one side, I think that even if the Saudis did start to produce a bit more crude, I don't know how much of a big impact that would have given the current fundamentals in the markets itself. But I also think that, you know, I think that this is not going to be one of the top line topics at these discussions that he has in Jeddah. I think, you know, other issues such as regional security are going to be more at the front of these talks. We could see something come out in terms of crude oil, but as I say, I don't think it's going to be anything dramatic.
Okay, and very lastly, in the medium term, what would you think that investors need to keep a sharp eye on?
So I think I go back to an issue that I've written about and talked about for 5 or 6 years now, and that is the ongoing low level of capital expenditure going into finding and extracting new conventional sources of oil. Now, first of all, just to be frank, in terms of the road towards green energy, the energy transition and so on, it's extremely important. We know that, right? It's clear that we need to follow this route if we want a sustainable future for ourselves and for the planet. But at the same time, I think we really do need to acknowledge that we're going to need fossil fuels to help us on that road to transition and to make sure that it's a stable one. If we don't do that, then I think the risk of social upheaval, to be honest, which we're seeing in some cases around the world at this point in time, is going to be far higher in the years to come.
Right.
If we look at the Gulf region, I think that the governments here are following the right policy, which is basically they are investing heavily into developing their clean energy capacity. So whether you're talking about blue hydrogen, whether you're talking about solar parks, whether you're talking about nuclear energy, but at the same time, they're also continuing to invest in the conventional oil and gas sector because they realize that these two need to work together in order for us to get to the green future that obviously everybody wants to get to at some time.
Okay, always informative, always insightful. Thank you so much, Glenn, and look forward to seeing you for the next quarterly outlook.
Thank you, James.
Thanks, Glenn.
Take care.